And good afternoon. This is Michael Filighera with logicalsignals.com. And today I am going to be updating the NASDAQ 100 future as of Sunday, March the 21st, 2021. And it's about 6:20 Eastern Daylight Time. And so Globex has basically just opened, or it's been open for about 23 minutes. And what I wanted to begin with tonight is to look at the alternate count. You've heard me speak about it. And in all honesty, it is something that we need to look at, because as I previously discussed in other posts, when we couple the Elliott wave theory with Fibonacci retracements and extensions, it really does give us an accurate roadmap for the markets. But it also gives us the means and ability to provide a plan B, or an alternate count that I run concurrently with the preferred count. And as often is the case, the alternate count is rejected by the market as the preferred count progresses. So today, I want to take some time and lay out, as I see it right now, a possible alternate count, which carries a whole different scenario along with it. So I continue to count a cycle wave 4, because here is the end of cycle wave 3. And you can see that was all labeled. That was at the 13,900.50 high. And we are in the very first, if we look at this, primary wave A down. And within that primary wave A down, we've now been really looking at that this is actually going to drop in its own ABC. Instead of 5 waves down, it'll be an ABC. So this is intermediate wave A, and we've been counting an intermediate B wave advance. And on last week's updates, I had put the B wave completing here in a failure. And that could still be the case. In fact, it could be complete here at a failure, and that could be a legitimate point. In fact, it's likely going to be what will happen when I go back and put up the preferred count again. And saying, for example, that this is only wave A, because now we're talking about the alternate, then we have a B wave decline, which actually ABC, so it could very well be complete. And I believe last week when we were discussing what to expect next, we allowed for that this could be a complete ABC, and now we're going to rally. Well, that was the alternate count, and now I'm going to show you how that can happen. Because again, as we've counted this out, the A and the B, that would suggest that we're going to get a C wave up. And so what I've done is I run Fibonacci extensions from the point of where intermediate wave A completed up to where the minor wave A of wave B completed, and then ran the extension down to the bottom of B, which is going to lay out where we think this C wave has potential of going. So the first relationship between an A wave and a C wave is that C will be equal to A. And if that's the case, then we're looking for a move up to 13,759.25. The next is that the C wave can be equal to 0.618 of wave A. And that would take it to 13,347, but we could say 13,350. And that actually would see the C wave would indeed put a new high in above that A wave, and that could complete the cycle. And it can happen very fast, or it could roll out over the next week for all we know. Again, we allow the market to tell us. So then the next relationship, if it continues to break to new highs for the wave, then we have this additional resistance up to that 100% level. But if it continues to break above there, a B wave can now go 1.382 times the length of wave A, and that would be right here at 14,171. So I can give you an alternate count that's going to include new highs. As we continue to watch the S&P and the Dow Jones moved themselves to new highs. The NASDAQ has rallied along, but not with the same intensity, with not the same gusto that it's going to go to new highs. And so, but we must allow for that potential, not necessarily having to give it a large probability, but we have to allow for that potential. And that's all I'm laying out right now, is to tell you where I believe my alternate count could take us. And these would be, whoa, Dad, these would be the resistance levels coming up. Now, I'm going to kind of hold off on that. I'm going to go over to the hourly chart. And now I'm going to take a look at, in fact, I'm just going to take those off to be truthful. Let's get rid of those extensions because that was upside. And now we want to look at the fact that what if, let me go back over to, let's see that, and go over to this chart. And again, we've taken the Fibonacci's off. And what if that B wave, as we counted, ended here? Now we're looking at a 1, 2, 3. So we'd be looking for a fourth wave continuation from that level. So let's put in just some Fibonacci resistance points, 327, that's it. I'm going to run that there. I'm going to put it at 81.75. That's close enough. And now we can see that it didn't really, and now I'll go back over to my other chart. We still could be heading ourselves towards a rally back up. But we can see this is the bar in progress. And what I would then be looking for is more what's happening on this 5 minute. It's going to get itself up and it's going to create a high above 12,898, more like 12,900-ish. Well, we have resistance right here at 904, and that can complete the whole thing. We have additional resistance at these moving averages, which right now are sitting at 12,912. And then that was the 50, and we have the 200 at 12,945. That's right now. If the market continues to go up, they will follow suit. But if the market starts to break above these levels, we then feel that, yes, we could run up to 12,974. But in the preferred count, we would be looking for just a wave 4 correction, and again, A, B. So that's actually the A wave. I mean, this would be the completion of 5, of 3. In any case, we'd be looking for it to run up and to complete in these areas. And that would make a nice complete 3. Even if this ends up being A, B, and this is just a C wave. If it's a C wave, I would anticipate that it's going to reach these upper levels. And before the decline would then kick in again. And as you can see, we're stepping in and buying it right now. And so we're going to allow for it. We can continue to look for a stronger downside move, and that is coming up next. No matter if we go up in the alternate count, which is going to take longer, we're going to have to wait longer, but on this preferred count, I would not anticipate now, under the preferred count, that we're going to rise up and we're just going to keep on rallying. Under the alternate count, yes. Under the preferred count, no. So you have to pick your point. Where do I flip over to that other count? And it likely would be a break above 13,100, I'll call it. Above that level, I'm beginning to think that, okay, we might be done for downside for a little bit. We've been there before. We've rallied up before. Again, going up to the other chart, we've rallied up here in the form of a B wave. If we get up there again, then I'm thinking that, yep, this is A, B, and now we're doing a C wave up to complete that B wave. So we have the possibility, and it can go up on air for all we know. Again, we must allow the market to tell us, this is what I'm doing. And I don't want to run on because we've got to keep these a little bit shorter. So for tomorrow, we have our marching orders. We have our levels now. I'm running the Fibonacci's on the way down. And for the up scenario, you're going to run your Fibonacci's on a Fibonacci extension, which is going to begin here to the bottom of last week, Friday. And that'll give you the levels coming up. And that would be on a break above 13,100 with some gusto. So in other words, the market gets up there and it's not giving you any indications that that's it, we're done. I mean, it kind of gets up there and is very comfortable. So point of control has to go up, moving averages have to agree, et cetera, et cetera. But again, we would know that when it got there. Because those are all the things that we take into advantage. On downside, the alternate account would basically be disqualified for now if we start to break below last week's lows at 12,630.50, or so we say 30. But it has to break below with some gusto. It has to go, 12,680. And it's actually 81.75. So really below 80. But it must go and be comfortable trading below these numbers to indicate and give more credence that we're going. This has now begun the next wave down and we're moving. If we just get a little bit, it could just be the completion and we'd look for another round. So again, we're counting a larger wave down, and it could be an extension, and it's just a continuation. And wave 5, if that's the case, would then be in force, and we'd expect it to break 12,680 and continue on down. And there we can put different Fibonacci's into place to suggest lower levels. And if that were the case, we would do that again tomorrow. We take those off because we gave the rally, and then we would need to give our what we feel is coming off. And in that case, we would start to be looking for much lower numbers. Oops. Yep. I'm just going to put, come back here. There to there. And now we've got what's next coming off. And that's going to be all of these levels, because we'd be looking for the next wave down. That's going to be the finish of being the 1, 2, 3, 4, 5, and we're looking for 3. And so we start looking at these lower levels. So if it really gets going, it could get nasty. And right now, we're sitting right in between. We kind of gapped lower this morning, lower this afternoon. It's gone up twice and come back down and put in new lows, and now it's gone up again, and it's putting in a little bit higher highs for this abbreviated time period. So in other words, we're still within the first hour of the Goldex open. So that's going to be it. And our next update will be tomorrow.